Yeah, except I do want to say that it should probably go down to that area if we had 33% debt to GDP like we did in 1980. If the stock markets were super undervalued like they were in 1980 with PE ratios of like 7, 8, 9, 10, where a brand new bull market is just forming instead of one that is hyper overvalued and overextended and about to crash. This time, I believe that we're going to blow way past that 1980 spike down on the bottom. So when you're looking at the value of your gold compared to real estate, you sort of in your mind have to flip this chart upside down. Those are the gains in value that your gold is making against real estate. This is how cheap a house is becoming if you're owning gold.
Mike and Alan argue that we're entering a rare phase of the economic cycle where precious metals gain purchasing power while real estate weakens. Historically, there have been moments when an ounce of gold, or even a few ounces of silver, could buy dramatically more real estate than normal. Today, housing priced in gold or silver still hasn't returned to those historic extremes, which suggests that precious metals may still have significant upside relative to property. In other words, the real opportunity may not be in owning more houses, but in owning the assets that will later buy houses cheaply, gold and silver. Their message: don't focus on price in dollars, focus on value in real terms. The metals to housing ratio has much further to run. Okay, let's go to interview.
I do want to point out for everybody that you made this chart a few months ago, you said. Yep. And so it's before gold rose from like $3,300 up to $3,800. Yeah. And so it doesn't have that data in it. And that means that that yellow line just fell below we're probably at like less than about half an ounce of gold now, something like that for a mortgage payment. And so, it just shows you that, throughout the centuries, period, throughout human history, gold protects your purchasing power. And right now we're in one of these cycles where the safe haven asset becomes the asset class with the maximum potential gains in purchasing power. So these are rare moments in history. Well, you did a chart recently of how many days silver spent above $40, and that this is monthly data. So that spike actually goes much further down to the bottom of the chart than what you're seeing here. This is monthly data, not daily. And then on top of that, back in 1980, when we had that spike, there was a lot of above ground silver. There were enormous government stockpiles still. The economy wasn't in trouble. Like I said, debt to GDP and all of those fundamentals. And we didn't have the entire world is about to rush into the precious metals to protect. Like in China, it's already happening. The West, for some reason, has been totally asleep. And it's really too bad that people weren't jumping on gold a couple of months ago before the last big rise. It's really too bad that people weren't jumping on silver back when it was $20 instead of, $47. We are about to break that $50 barrier, and it's going to be in the news over and over and over again. And you're going to see this very rapidly, especially if it's coincident with, in 1980, real estate wasn't in a hyper bubble, and it is today. It's in a gigantic bubble. And if silver is going north at the same time that real estate is crashing, we could see a day come where less than half the amount of silver is required to buy a single family median price home versus this chart in 1980. So, this chart says that you probably have 5 times gains. In other words, you could sell a house today, invest in silver, and if you are able to nail the peak, you'd be able to buy 5 homes with the proceeds from your silver. Well, it's probably going to be more like 10. That's my point, because the fundamentals are there this time. So anyway, okay, let's.
Yes, so that could even be 1,000 ounces of silver, right? A 10x move from here is 1,000 ounces of silver. That's 2 monster boxes. A lot of people have 2 monster boxes, so
yeah, right.
That's
right.
doable. That's doable.
It is doable.
Yeah. So what I have here,
and, it's just math, and then you take what happened before. So it's a repeat of history, adjusted for inflation, and then you add the difference in the underlying fundamentals. Real estate was not in a bubble. The stock markets were way undervalued, and gold and silver went into a hyper bubble. This time, gold and silver are going to go into a hyper bubble, but real estate and stocks and bonds are also in hyper bubbles, the biggest in history. And when those bubbles pop at the same time that gold and silver are going north, you're going to see some amazing priced in gold, priced in silver, fire sale prices on everything. Stocks, bonds, which you probably don't want to touch, and real estate, which you probably want to consume as much as possible. Get fat on real estate. But I feel like the only one that could possibly happen and will most likely happen is that all of the real estate will fall. We are in for a crash because that is what is in a hyper bubble. Right now, incomes are depressed. But if you go into a crisis, and there is one brewing right around the corner, incomes do not rise in a crisis. Unemployment rises. And so I have a feeling it's probably going to be bigger than that 38%. We're going to see something similar to the global financial crisis, but even worse, because it isn't just real estate. It's real estate, stocks, and bonds. The median sales price and the M2 currency supply, and look at that correlation since 2020, since the pandemic. Oh my God. I can't believe it. It's
I'm speechless.
This is 100% Jerome Powell's fault, and the Federal Reserve, and them screwing with the economy instead of letting the free market work. Them and the Treasury, Janet Yellen, this is the blame all lies on the shoulders of very few people. When we experience this next thing, the Bernanke bust, it's Bernanke, Powell, Yellen, and these people that think they're masters of the universe, that think they know more than the free market, the sum total of all the transactions that go on in a society. Nobody has more information than that. And yeah, so this is going to be an absolute disaster.
Yeah, this is what we call a systemic problem. you got to change the system. You got to change the monetary system. Otherwise, it's just going to get worse. Things get more volatile. The bubbles get blown even bigger. The crashes are even bigger over time. It's not pretty. It's not pretty.
Okay.
Our next chart. Home sales are headed for their worst year since 1995. That's 30 years. That's an entire generation and a half. This is the worst year we've had for home sales. No one wants to buy. It's ugly.
Wow. I didn't know that. Amazing.
Yeah, that's according to Redfin. So
and that creates downward pressure in pricing.
Exactly.
And we're up in a hyper bubble.
Exactly. Okay. And very fascinating, 54% of Americans, that's more than half, by the way, that's most, said there is no mortgage rate at which they would feel comfortable selling their home. None.
You know what, though? And this is true, but the public is generally wrong. Now is the time to sell your house like tomorrow. If it was me, I do not give financial advice, but I would be selling residential real estate like tomorrow and buying silver and gold in that order. Silver first, then gold, because of the gold-silver ratio. Silver is a screaming bargain. Wow, that's per Bank of America.
Mm-hmm.
Wow.
Yeah. And that's up 12 points from last year. So last year, it was apparently 42% of Americans that said that. Now it's 54%. So that's a huge increase in a year.
Right.
That's huge.
Well, they're seeing the value of their homes go up and up and up. And humans always just take whatever's happening today and project it infinitely into the future. And it doesn't go like that. You and I spent a long time on cycles in a chapter that was cut from our book because it was putting too much space. That chapter ended up being like 100 pages or something. It was ridiculous. But it was really about all of these different cycles that we go through. And people, they haven't experienced a big crash since 2008. So it's been a long time. And so they just think that the past few years of experience, they're seeing how much more it would cost them if they sold a home and bought another one to replace it. But what we're seeing with all of this evidence, if you sell a home, it's more affordable to rent right now. And so you rent while you're invested in gold and silver, and then you buy once the price of homes has come down by 80 or 90% measured in silver, so that you can buy 5 or 10 times more homes and have all of this rental income from cash flowing real estate.
Yep. But the public, to your point, they're usually wrong, and they don't understand the cycles. So
there was a whole chapter about that in my first book. So yeah. Okay.
Excellent. We've got a chart here from Nick Gurley. It currently costs about $800 more per month to buy a house with a new mortgage than to keep your house with an existing mortgage. That is a huge deviation.
It's huge, and that is the reason for the last statement by the public. They got trained by this, but this is about to change, and it's going to change dramatically.